All right, let's do a quick sector roundup here, Matt. Start the week. There's a few that need updating. I'm still very, very excited about potentials in communications and tech and some of those areas,
Well,
but some of them
let's
shift a
start
little bit.
right there with technology, communications, and discretionary. Let's start with the top of the market, our highest rated sector at tackle trading, right there at the 10 handle is technology. And technology on a like I said when we were looking at the indexes, on a day where you saw a little bit of negative price action in some of the sectors and some mixed price action in both the consumer cyclical areas of the market as well as the defensive areas of the market. You know what really solidified itself and shored up and held defense faster than anybody? Comms, tech, discretionary. Like, it was just one of those days where it kind of had some weird price action. But when you're looking at it right now, you got to like this continuation trigger against a high base right here at 160 on the technology sector. Got a nice little upgrade from tackle into the 10 handle last week. And again, you're talking about stocks like Apple here today in technology, breaking out on the backs of the new iPhone announcement. Nice little more like a flag ascending triangle type short-term pattern, but good pattern breakout coming out of Apple. But you're also looking at stocks like Nvidia that are darlings to the market, looking at potential breakouts here in technology as well. So keep an eye on technology as it fights against that breakout channel at 160 that it's been looking at over the course of the last 5 days. When you're looking at XLC and communications, you gotta love this little sector over the course of the last couple weeks as it broke out at 84. Real good momentum here, and I'm seeing a lot of consistent price action. As you saw the recent bounce off the 50-day, it went from 81.5 all the way up to 84, 84 and change. We'll call it 84 though. Nice little 2.5 point bump there. It went from 83.5 to 86. Looking at a nice little 2.5 bump there. Real consistent price action. Got a lot of confidence in that area. Did get an upgrade at tackle trading, 5-point upgrade over the weekend due to the consistency of technical analysis. And we really liked this pullback here as it was coming into the 9 EMA. And obviously this sector is led by the Googles and the Facebooks of the world. You take a look at Google, very consistent trend, nice little 9 EMA bounce right there. You look at Facebook, not as consistent of a trend, but very similar pattern here, confirmed on the flag-based pattern, now fighting that breakout there on Facebook. But it isn't just those two big dogs in that area of the market. We did take a look at Netflix, but Netflix is exploding here, guys, and it's really aiding this sector right now. And when this momentum stops, I don't know. Obviously, the short-term momentum is overextended, but it's not like you're slowing down yet. And that's the fascinating thing with Netflix, is you're not seeing slowing momentum even as it is elevated in the price threshold. When you're looking at that on the weekly chart, you got that as a weekly chart that just broke out. And so you got a little bit of short-term overextended, but the weekly chart still looks good scenarios going on in Netflix. Obviously, Facebook, Google, and Netflix, big dogs in this area of the of communications, and they look really healthy right now. And then when you take a look at discretionary was ranked there at 40 for us at tackle trading. A lot of that was based on the double top here at 185. But a lot of us at tackle really started liking the shifts in volatility here over the course of the last 2 weeks, very similar to the Russell 2000. You reclaimed all your moving average. Your snapback here solidified that 180 threshold, fought back up against that breakout channel at 184 to 185, consolidated nicely here. And on a day, again, where you have some concern in your defensive areas of the market, you got some slight concern in areas of the market like finance and basic materials, discretionary solidifying itself. And when you're looking at discretionary, I'm looking at 3 stocks right now. I'm looking at Amazon with a nice little short-term high base breakout, couple that with a weekly channel breakout. That looks very interesting. I'm looking at Tesla here, breaking out officially, but can Tesla, which has not been great on breakouts recently, that's why there's a little concern there. It's not been a breakout darling lately, but it is technically breaking out here today as well. Can that give a little bit of support to the discretionary sector as well? And then I'm looking at Tractor Supply, obviously a little bit of a different company than Amazon as well as Tesla, but an important stock to the sector as well. I love the analysis over the course of of the last 2 weeks that is building into this $200 breakout. Had a chance a week and a half ago, failed, came back down, solidified the support level as again, fought back up into that 200. Love that weekly analysis as you're starting to fight into that $200 breakout as well. That could certainly, with a breakout of 200, help that sector as well. So discretionary itself ranked right there at the 40 handle. But again, 40 handle at tackle trading typically does mean neutrality, but at the top end of the range, we're looking at perhaps a breakout here, and it's a breakout that I actually really like with the backs of Amazon starting to build a little support, Tesla breaking out here today. Tractor Supply has not broken out yet, but right underneath that $200 breakout channel, a lot of Tesla's continuation, a lot of Amazon's continuation, and the ability of Tractor Supply to break out, a lot of that will be benefited and helped if the sector itself breaks out of that 185. So keep an eye on 185. I know there's a tick at 184.7. I just have a feeling at 185. Keep an eye on 184.70 by 185 in this sector. You break out, those three areas, again, Amazon, Tractor Supply, and Tesla look very attractive in this space if you do get that breakout. But even if you don't, those, like I said, Tesla's breaking out today. Amazon's breaking out short term today. Has an interesting weekly multiple time frame analysis to it as well. When you're looking at the more the cyclical areas of the market, finance did catch a downgrade from us, the tackle trading, mostly due to now the double top at 39. It has been confirmed, and so you saw it ding over here. It held the channel a week and a half ago. Then it broke down underneath the moving averages. Now you're looking at this not as a bullish retracement that is fighting against a breakout. You're now looking at this as a cup and handle continuation pattern. And so because of the cup and handle continuation pattern, you got a downgrade due to the momentum shift. And so you're looking at a little bit of a downgrade in finance. But with that said, you're still looking at Morgan Stanley for a breakout potential. You're still looking at Goldman Sachs for a potential breakout situation. The sector itself, you're in this wait and see mode where intraday support is really gonna form here to form that cup and handle. It's got an interesting opportunity right here at 38. It found that support off a nasty cash open here today. Found that support level at 38. That was the support level last Friday as well. If it can hold 38, you're going to start to see this as a real good textbook example of a cup and handle formation. That's why 38 is important. If 38 gets violated, you're most likely going to see a repeat of the volatility down to 37 and change, right where the 50-day moving average is. That would shift to more neutrality in the financial sector. So again, micro analysis here at 38, but 38 holds, you're looking at that as a cup and handle continuation pattern. If 38 doesn't, you're looking at that as a more of a neutral based consolidation pattern. And so 38, keep an eye on. Ultimately, 39 violation is the trigger that everybody and their dog would love to see. Already talked about the discretionary space, the industrial space, XLI. Talked a little bit about the concern here and again, the concern in industrial specifically is two specific industries. You're looking at aerospace and defense. Boeing taking it on the chin a little bit today. Lockheed Martin taking it on the chin a little bit today. Tim, your favorite, the knock list taking it on the chin a little bit today. Some of these are violating trends and support, so a little bit of concern in the aerospace and defense, but you also have concern a little bit in specialty machinery like 3M as well, and you saw a big violation of support and then a violation of the 200-day moving average. So the industrial space is going to be a little bit difficult in my opinion. Now the aerospace and defense has kind of got blown out of the water. Specialty machinery's kind of got blown out of the water today. So not a space that I would be looking at this week to pick up. Not when you see better charts over there in comms, better charts over there in technology, better charts over there even in finance, much better charts. So industrial's probably a little bit of stay away. Going to get a lot of headlines because there's going to be infrastructure talk happening over the course of the next couple weeks. But from a sector perspective, there is concern here. So I'm going to list it as a little bit of a stay away. And if we were to see today, we don't get this right when we're ranking on Fridays, But if we were going to see this price action here today, industrials absolutely would have got a downgrade here, and definitely a downgrade into that 40 to 45 range, I would say. So we are looking at neutrality on the industrial sector itself. When you're taking a look at the material space, a little bit of negative price action in gold here today, as it's still in the box and got drilled back down to the 1800 level. You're seeing a little bit of concern with specialty chemicals as well, but overall, I still see this sector as a very similar sector as I saw it last week, just fighting through some volatility a little bit. When you're looking at the last cyclical area of the market in energy, no updates here. Honestly, every stock in this sector kind of looks a little bit like the sector itself. And last week, consolidated right between the 200-day and that 50 price threshold. As you can see, we've been looking at this 50-day moving average for the last few weeks. We've been looking at that $50 support resistance level as well. You look at that 200-day moving average creeping up, 50-day creeping down. Does kind of feel like it's going to do something sooner than later, but we're still looking at a little bit of K-trade scenario, little bit of volatility. But again, you break out at $50, you're reclaiming the 50-day moving average, you're reclaiming that that significant whole number of $50, you're reclaiming the previous level of resistance. That's the trigger I'm looking at. You break down out of the 200, you're just staring at that 45 support handle. So again, all energy analysis starts with the reclaiming of the 50, both the 50 SMA and the 50 50 resistance level. And then when you look very quickly at the defensive areas of the market, let's start with the one that got upgraded. That was real estate, XLRE. Nice little breakout from last week. Saw a higher high. Looking at it forming a higher low. Not only would I continue to upgrade this, I would upgrade this on Friday. Even if I knew today's price action, I still would have upgraded on Friday, given the fact that technically this is now a higher high and this is fighting for what is known as a higher low. That also could be a high base. And when you get overextended, these things are needed. They're good things. They're healthy because it stabilizes the price action. It forms defense. It shows the market can be stable at a higher price threshold. And so these are not a negative thing in my opinion. The higher high at 48.80 has been confirmed. Let's see it consolidate. And when you're looking at this area of the market, obviously you're looking at AMT doing something very similar, Prologis, PLD doing something fairly similar, and then Public Storage doing something fairly similar as well. And so the upgrade, it got upgraded last week, even with the negative price today, especially underperforming the market a little bit here today. Still would have upgraded from a technical perspective, as you are seeing a higher high and a higher low. XLU utilities resistance held. You're now looking at a little bit of a downgrade in utilities. It did get downgraded already last week. I would downgrade again. I'm seeing this as neutrality in utilities at this point. So let's see how 68 to 70, how this short-term levels handle. But I wasn't looking for utilities from a short-term trading in the first place. And then finally, let's take a quick peek at healthcare. And healthcare got a little bit of a downgrade, but more due to now the double top, slowing momentum. You still see this as a little bit of a breakout scenario, and you definitely see this as a bullish continuation pattern, which means you are looking at the breakout. And now that you're looking at this as a bullish continuation pattern, you got to respect that. And so you downgrade based on the momentum. And then you have a little bit of concern with Johnson & Johnson and a couple other drug manufacturers here today. But outside of that, that's the sector roundup for tackle trading.